and definitely something we can see in this week of the market, and we haven't even talked about this yet, is a lot of investors aren't patient. A
Yeah.
lot of are not patient. I mean, let's talk about the market this week. I mean, we see, taper talks. We see Fed Powell, getting reelected and saying that take the word transitory out, and then the media blasting him. And oh, isn't it ironic that he's saying this now that all of a sudden he got reelected? So many things. Then you got the Omicron variant, but we've been here before. Like, we've been through, like, you look at the graph and you can think of all the different things that have happened since the stock market has been around, but it's not a straight line, right? Like, it goes in dips, but over time the mountain goes all the way up, and just so much panic, and I guess that's one of the things. Like, I just have so many investor friends on Twitter, and putting memes of houses burning, and everything, the cartoon dog. And I like times like this when I can take my cash that I've waited. I normally am fully invested, but recently I've come across some extra free powder, and with that, being able to actually dollar cost average. Now, I did get a little too aggressive last week. I was really excited. I'm like, oh man, I'm getting in, Teledocs at 96. It'll never go below 90. And then it's right at that point, or you look at C Limit. Oh, I'm back at the 270s, and now we're at the 259. You're never going to catch a falling knife. You're not going to be able to. What I do know is everything that I just bought was well off its all-time high. I have high conviction. I love the leadership. The thesis hasn't changed. So why wouldn't I buy, right? Now, what I am learning as a young investor is I still need to do smaller chunks of dollar cost averaging, because what you think is the lowest price it'll go, take that by 50%. And that's something new for me to learn, because I for sure thought, like, for instance, I bought Digital Turbine at 52, and I was like, we're not going to see the 40s anymore. It's looking at all the technical analysis there, it's bouncing here. It's okay. That's it. Oh, 46. And so, and so all this fear, and we're going into next week, we're going in the following weeks where we have some options expiring in December 17th. So just more fear going on. What's your take on all this, and how do you stay calm? My time horizon's 20 plus years, so I'm not selling anything. But what about you?
So I think first thing on the Fed part, I think Fed actually should have declared the taper timing last December rather than delayed it. They stayed in this position, the election time, the transition of power, because that pretty much what the market went into euphoria also. Okay, now before you understand what Jerome Powell is doing, you need to understand where he's going next. Okay, so if you see that people who have been Fed head, what kind of position they take after that, because people at this particular time, his job is not only to look market and investor, his job is also to look what is after my current assignment. So you can see, like, for example, Janet Yellen. I mean, this is kind of a position which Jerome Powell can have, I mean, in future, especially if Republicans comes in power. Okay. And you have already seen that you cannot trust everything they say. Like, initially they said inflation is transitory, and now, I mean, they have injected so much money. So here, this is how I see the situation. See, at this particular point, market has pain, crypto has pain. Okay. Ideally, you should do tapering earlier, because there's a lot of liquidity. You need to start reducing the balance sheet. But if you do it, it will be all out panic. Okay. Given the current rating and performance of US government and President Joe Biden in general, and especially I'm 100%, I mean, not 100%, I mean, nothing can be 100%. I have a certain conviction that when you do positions like this, like Jerome Powell has been renewed a new term, there are always back-end deals. So my view is that he will just dilly-dally things for a couple of months without giving any clear direction. And given the midterm elections are coming, yeah, I think politicians will not take chance to send angry voters to go and to the polling booth. So what should be done and what will be done is going to be very different. What will be done will be driven by near-term objectives of politicians, okay, on the both side of aisles, and it may not be the best thing for economy to happen. So my idea is like whatever happen or the whatever market will stay flat. The impending crash that everybody is waiting, I mean, I don't see that happening very soon.
You're saying rip the Band-Aid off. Let's get it over with. Let's just, we know
Yeah,
it
I mean,
happen.
yeah, I mean, see, that's, I mean, I'm a guy who believes in capital discipline. So that was the first. But the second part is how do I stay calm? Okay, so yeah, I have lost a lot of money over the time. And one thing which actually helps for me is I live in Asia. So that means the market opens just before I'm going for bed. And by the time I wake up, markets are closed. So whole of my investing is about how to sleep while invested in market. So here is my theory. And I think this is something I learned the last in investing or the latest in investing is that you can learn fundamental, you can learn technical analysis. It is the mental part of the investing which is the toughest part. How to learn to stay calm. And this is my theory on investing is that this is what I tell myself is I am not good at predicting bottom. So when I buy something and things go down, I don't care. I just stay in like in this situation, my leverage is already zero. What I'm good at it is picking companies 8, 9 out of 10 times who are going higher 2x, 3x, 4x. I don't invest in companies expecting it will go 20% high. I don't care. If you bring an investment to me and you say this is 2x, most of the time I will not invest. So I'm very strict in selecting companies, and that's where my strength lies. Okay, I focus where I'm good at, and I don't care. I mean, if I buy and things go low, because nobody can do that.
Yeah, and the thesis is intact, and the quality. Yeah. I'm in the process of trying to consolidate my portfolio because I do understand. Yes, it is more riskier the smaller positions you have, but it also can be very rewarding. So the better you refine your due diligence and your research approach, finding your knack of area of expertise. I have a very high passion for technology and AI and healthcare stocks. So slowly doing that.
I back myself in identifying trends. That I think this is something where I see that I identify things earlier. And to be honest, in strategy consulting, that's how the career also works in a way that you talk to different management and even with governments and regulators that this is likely to happen, and you explain why. And this is pretty much, I mean, you are supposed to do. So like, for example, last year I picked like buy now, pay later very early when even people were asking like, okay, what is buy now, pay later? Okay, I picked like psychedelics very early that I realized that this is going somewhere, and I had like my own logic of things. But like in buy now, pay later, when I went I had a very simple idea that I saw this company. I said, this company is cash flow positive for like 14 years. I said, who does that in invest? I mean, people love to burn venture cash. And I said, at the end of the day, what is their value proposition? Their value proposition is that they are giving you these micro loans at a far lower interest rate than credit card gives you. So it was clear for me that this is something which is going to emerge. And especially I was also using the statistics of debit card versus credit card, which was very, if you see the debit card use in younger generation, it is much higher than the credit card. Mm-hmm. So these are like, I started putting these things together and I said that this is something, this is going somewhere. And this is where I invested in Klarna very early. And in true sense, Klarna is one investment, I mean, that actually became 10x for me. Okay, I mean, I went in and nowadays in secondary, it's like 63, 65 billion. I was in when it was 5.25 for me.
Are you a big bull on a firm and kind of that whole them having a
Oh, yeah.
leadership position in that, or do you think anyone can do buy now, pay later?
So a lot of companies will come in buy now, pay later for a very simple reason. The market will go 20 times from here, in my opinion. So sometimes the trend is so strong that even bad players will grow because
Does
because
that
there is.
put credit card companies in challenge because they've always been having these high interest
So
rates, or will they jump on board doing buy now, pay later?
so I can put my money on it that credit card companies will jump on it. The challenge they will have is because credit card interest rate and interest revenue that they get is these big companies are never good at cannibalizing themselves.
Mhm.
So they will eventually be forced to build these products. And I mean, yeah, this is where world is going. So you like it, you don't like it, they have to do it. There will be a point, there will be like same thing like happened in auto sector. Nobody wanted to build EV, and eventually everyone is forced to do now. So same
That's
thing will
true.
happen with these companies. And this is where I get another insight is like why these kind of companies are not mushrooming. And then I realized, okay, the building a BNPL company is not that straightforward. You need the technology, you need a lot of regulatory approvals, and yeah, I mean, sometimes you need banking license and things like that. This is where I picked my investment was Solaris Bank, and I'm reviewing another one nowadays. I realized that, so for example, Dom, you want to build a BNPL company, okay, but you don't know, I mean, about all this. So you come to me and you say that you provide me a full stack solution where I select what I want to do. I don't have to worry about regulatory approvals and all that. So when I got that idea, I realized, or you see BNPL, you say, I mean, like, okay, this is how Klarna is doing. I don't want to do that. I want to build a very specific BNPL products only for sports event. But it is going to be very specific, but it's going to be very rewarding, and a lot of features are going to be there. So with banking as a service, you can actually do that. You say I sign up for the technology stack and I want to build a product like this. And you can test your idea in like small, like $300, $4,000 or something like that. And you can immediately launch. You have all the regulatory approvals. That's all. So this is the thing. And so what is banking as a service? It's a self-serving platform. It is allowing people to express their ideas. And a lot of people will come and express and build their ideas, and some will eventually build large companies. And this is the power. So banking as a service to me so the moment I realized it, I mean, I went in, I said, okay, I mean, I want a pie of it.
That's Solaris Bank. That's the one that's going to come public, or is public.
No, it's not public. I mean, there is actually in this space, there is not a single company that is above 5 billion.
Gotcha.
Okay,
So
so this is where
is there any public companies out there doing this or no?
Not exactly in a full way. I mean, there are two companies which are pretty good at it at this particular time. One is CrossFree, one another is Solaris. Solaris, I'm very interested because Solaris is a European market is the shield up market. If you're outside, you cannot enter that easy. So if you are already there, this is one of the reasons I stick with Klarna very early also, because I realized that it's easier for Klarna to go to US than US companies to come to Europe. Sure. And which exactly what happened, because when they went for US, they raised capital and they kind of went in this hyper growth mode. So, and same thing I did for Mestios also, because I realized this they have this European advantage. And so yeah, so at this particular point, banking as a service is where semiconductor used to be in 1950.
Wow.
So everybody is excited about it. Nobody knows where it's going.
That's a big statement you just said there.
Yeah. So the moment I realized it, and I said, yeah, I mean, this is something I want to do then.
Okay.
So, I mean, yeah, I do expect this investment to go like a 10, 20x from here.
Going around the fintech world, we've talked about buy now, pay later. We've talked about banking as a service. Walk me through your thoughts. I'm sure you've at least seen tweets about it because it's all over FinTwit, and I've read some dossiers on it, and I think I'm a believer in Marqeta. Obviously, customer concentration is what's scaring everyone off with 73% customer concentration with Square, but they also grew their non-customer results with Google and other JP Morgan and others 79% last quarter, right? They obviously know they're concentrated. They have to go away from that. but it seems like they definitely have a tech advantage when it comes to helping people modernize their payment systems.
So, so I have a weird point on this one. Okay. I mean, first, I like the company a lot. And you know, the weird point about the company, what people say about the customer concentration. I don't know why people are so much scared of customer concentration. This is an academic view that if you are relying on a customer, then your risk exposure is high. Fine. You can have a high risk exposure if there is a premium for it. Okay. And this is like academic view. Okay. You need to, like, people say, oh, Palantir has such a high customer concentration on 5 or 6.
Sure.
I mean, everyone has to remember the example of PayPal when it started. PayPal was predominantly eBay based.
Mm-hmm.
Okay. What happened with PayPal over these years?
Yeah, we wish we would have got in on it.
So when people talk about fintech and they talk about a customer concentration, it's a wrong way to look at it. See, the way I look at it is, in fintech, it's all about idea validation and scope of expansion. Okay, it's complicated. So you will always have customer concentration in early part of a company, because
Sure.
they will focus on one client, they will focus on one kind of business model. So customer concentration is actually a sign of a validation of idea. Of course, if somebody make mistakes and you don't have proper management, you run into agency issues, any company can go bust. And then say, oh, people say, oh yeah, I was right, because they had a very high customer concentration. Customer concentration should not be looked into this way. It is high. Fine. Look at the customer and how strong the customer, how strong its balance sheet is, how strong its brand is.
Yeah.
Like, for example, I mean, I'm reviewing this company for a fund, and I have to advise my recommendation whether they should invest in it or they should not invest in it. Okay. And so they asked me about it, and they said that they only have like one customer. And I said, like, okay, I was looking at who is this customer. So this customer is Tesla.
If you got them as a customer, that's pretty good.
I said, even if they increase their capacity 20 times, they still don't have capacity to serve this customer. This customer is so big. Okay. So yeah, I mean, let's go invest in it. Okay. Because even if Tesla fails or Tesla doesn't take their product, Tesla has already created a market that people will be ready to replace it.
Mm-hmm.
So, I mean, to me, that was a pretty safe investment. So this customer concentration point of view that people says, and I can give you hundreds of examples. I mean, I have seen this. So this is another thing, is like, there is an academic view of business and strategy, and then there is an executing. This is what you see in the real life, and which is very different.
I mean, we saw this with Twilio, with Uber, and when Uber, left, there was some short-term pain. It was a good time. I did buy a decent amount during that time, and because I work in the world of SaaS, I understand everything is shift left and go to developers, and they're a very developer-focused company with great leadership, and they rebounded. Fastly, similar situation with TikTok, has not rebounded fully. Now they've gone over with some new leadership. They've added new leadership as well to the board. So, and they're aware the culture has to change and they have to rev up revenue quickly. It's more, they're in more of a prove it stage, right? Like, prove you can compare with Cloudflare, because Cloudflare is on fire right now, right? And their business model is different. Their customer base is different. So I guess just summing up the week that we're in, I think we can both agree there's still more volatility to be had. We're both patient investors. We welcome when great companies go on sale, and we're going to just do our due diligence to make sure our thesis are intact. And we've been following our companies close enough that we know when a good price target is, and we can't believe we can get it on sale.